Index composition leaks, Trump Elon Musk drama, and how Japan's monetary policy and bond yields looks like it can be a concern for the markets. An eventful start for June trading. Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. The Philippine Stock Exchange is apparently soliciting comments and feedback from key stakeholders on its proposed revisions to the composition rules. The key proposals include lowering the minimum public float from 20 to 15% for companies valued at least 120 billion, benefiting large firms with tightly held shares. Now, new metrics like the median activity trading ratio will be used to assess actual liquidity instead of just the average daily value turnover. But a leak and a simulation to the effects of these changes caused some speculation on a couple of stocks. China Bank took a big hit because of its liquidity concerns. If implemented, China Bank may not meet the liquidity requirements. Look at these volumes, right? The stock had a massive sell-off last Friday, dropping 9%, almost hitting the key support area at 65. Could be a chance to buy for a technical bounce play. I don't know. But China Bank, not really one of my favorite stocks. We'll see what happens. Meanwhile, if there are losers, of course, there are winners. Remember, Aboitiz Power was delisted from the index because it fell below the minimum float requirements. But with the minimum float reduced to 15%, Aboitiz Power will be able to meet these requirements and could make its way back into the index. We highlighted Aboitiz Power in the last couple of weeks. We mentioned that at these levels, Aboitiz Power looks like a good pickup, especially with the yield at these levels at 6.6%. Little did we know that this would happen to Aboitiz Power last week. So congratulations if you were able to pick up shares. But, all this might be just an overreaction, as the PSE clarified late Friday that only after such comments are received and evaluated will the PSE consider if there's even a need to change its present index rules, and when PSE decides to institute any changes to its index policy, the appropriate announcement will be made and ample time will be provided before implementation. So I guess that's it. Let's see what happens this week, right? So meanwhile, some key economic data came in last week. Inflation eased further to 1.3%, driven by slower increases in rice and utility prices for May. It was the fourth consecutive month of easing, and the May reading was the lowest reading since November of 2019. Then unemployment rate came in on Friday, rising to 4.1% from 3.9% recorded in March and 4% from the April of the previous year. Now, with inflation down and unemployment up, we've been seeing some downward revisions on the GDP growth target after the World Bank Group, OECD, now also projecting a slightly lower GDP target of 5.6%, which is again below the 6 to 8% target of the government. This is even lower than the 5.7% last year. With growth rate slowing, unemployment up, inflation rate 1.3%. Could this seal the deal for a rate cut this June? Meanwhile, global GDP growth is also projected to slow down from 3.4% in 2024 to 2.9% in 2025 and 2026, with the sharpest deceleration seen in countries like China, US, and Mexico. Right now, the slowdown, of course, driven by trade barriers, political uncertainty, and new tariff policies disrupting global supply chains. Despite this, countries like India and Indonesia are expected to maintain strong growth through 2026. PMI numbers also came in at 50.1, a very, very slight expansion of the manufacturing sector. However, it was down from 53 last April, but compared to our ASEAN neighbors, only the Philippines expanded in May, with Vietnam, Myanmar, and Indonesia registering contractions. Expanding to the Asian economies, and speaking of trade barriers, right, China's manufacturing sector shows an alarming weakness. No, May's Caixin manufacturing PMI plunged below the 50 mark, the worst decline since 2022. Both official and the private PMI surveys point to consecutive monthly shrinkage here. No? So there's a bit of a difference here, which just reflects, no, reporting timings. No? But the broader signal here is clear, right? Business confidence and industrial activity in China are faltering, no? Especially as tensions between US and China have escalated despite a 90-day tariff truce. No? So last week, President Trump called Chinese leader Xi Jinping extremely hard to make a deal with. The two nations have hurled accusations of violating trade agreements, and frictions have deepened over rare earth export restrictions and US tech sanctions, and especially with the latest visa revocations in the US, reflecting broader geopolitical and economic rivalry. But how quick things change, because later in the same week, Trump had a quote-unquote very good talk with the Chinese president, and the two leaders finally had the long-awaited call, which resulted in a very positive conclusion for both countries, right? So one friend in, another friend out. Trump's BFF is now FTO, or friendship totally over, right? A week after receiving a key to the White House, Elon Musk called out President Trump and the GOP spending bill, calling the bill an abomination, right? So the two engaged in a tweet storm last Thursday's trading session, while Tesla share prices continued to dip, no, falling 14.5% during the session all throughout the world war. So Musk took to X and fired shots across Trump's bow, claiming the Epstein files mentioned Trump. Musk also tried to start a kill the bill campaign on Wednesday, to which Trump responded that he was disappointed and claimed that he kicked Elon Musk out of the White House. The image here says it all, right? So the US labor market showed significant weakness in May, with private employers adding just 37,000 jobs, the lowest over 2 years, amid growing uncertainty and hiring hesitancy. The May forecast was for 110 jobs, so the 37,000 announcement fell way short of the estimates, and continuing a downward trend from earlier of 2025. But the non-farm payrolls on Friday and the unemployment numbers still showed a resilient labor force, under 39,000 jobs added last May, more than the 126 expectations, and unemployment rate held steady at 4.2% amid Trump tariff disruptions. But despite the May jobs beat, President Trump again criticized Fed Chair Jay Powell for being too late in the central bank's hesitancy to cut rates. So Trump urged policymakers to ease borrowing rates by a full percentage points, writing in a social media post, "Go for a full point, it will be rocket fuel for the economy." But as of now, recession odds have pulled back to 28%, way down from the 70% peak last April. This brought much needed fuel for the S&P 500. Let's look at the S&P 500 charts. US markets finally hit a bull market as the S&P 500 ended the week at 6,002, a little bit above the resistance level here at 6,000. So far, if we look at the 2-hour charts, right, the trend here is very bullish. The market's pushing upwards, hitting the resistance here at 6,000, but the upward pressure here, right, forming a wedge. We have here a wedge formation here. The upward pressure here could push the markets to break out of this wedge formation for a retest of the resistance area here at 61.40. So the US markets potentially in the coming weeks could make another all-time high if the trend here continues, right? So we'll see. Now let's look at the Japanese 10-year yields, because I have been looking at the Japanese yields and there has been an increased volatility in the bond market in Japan, and this is causing some worry for me, right? Because if you look at the volatility in the Japanese 10-year notes, this has surged to record highs. I mean, even higher than where it was during the 2008 financial crisis. All this really is the result of investors being unsure about what Japan's central bank will do next. Will they raise interest rates? Will they stop controlling bond yields? This uncertainty has caused bond prices to jump around, which has made it risky for people who normally see Japanese bonds as being very, very safe and very, very stable, especially at a time when investors are making big profits, again, from a strategy called the carry trade. The carry trade, if we remember, this involves borrowing money with low interest rates. In this case, Japan's interest rate is at 1.46%. So they're borrowing with low interest rates and investing this in countries with higher interest rates, for example, the US, which actually hit 5% last week. Carry trade here has hit a 7-year high in terms of its returns. As long as Japan keeps interest rates low, the carry trade can continue. But if Japan suddenly decides to change monetary policy, this strategy could collapse in the coming months. And remember what happened last year when the carry trade had an unwinding, right? So it introduced a flash crash in the S&P 500 and even in the PSEI. Look at the drop here. The PSEI dropped from 6,670 plus to 6,400. So that's like almost 400-point drop. While the Philippines is not a major destination for Japanese yen carry-funded trades, right? The unwinding of the carry trade introduced by this volatility here could introduce some shifts in global risk sentiment. And because of this risk sentiment here, a rebalancing can happen, which can introduce foreign outflows. This can trigger a global deleveraging. Foreign investors may pull out of emerging markets like the Philippines to reduce overall portfolio risk. And this might introduce selling pressure on PSE listed stocks, especially those with high foreign ownership. Of course, the normal effects here, this could weaken the peso and could hurt sectors that are reliant on imports. But similar to these, this could introduce short-term pain, right? But it may open long-term value buying opportunities for investors. And speaking of PSE listed stocks with high foreign ownership, let's look at the foreign flows year to date. These are the top stocks bought by foreign funds. These stocks could take a hit if the Japan carry trade unwinds, which could introduce some buying opportunities for these stocks. During the last months, we've had some new names come in: URC, AEV, and GT caps. But hopefully, things can stabilize a bit in the Japanese bond yield market. So let's look at the local markets. The PSE consolidated last week, but the slew of economic data may have helped the Philippine markets eke out a gain last week, closing in the green, breaking a 3-week losing streak for the PSEI. So for now, the markets are consolidating here. The PSEI seems to have formed a triangle formation here, and the normal reaction from a triangle squeeze here is for the index to move, to continue the previous direction, which in this case is an uptrend here. So we might see the index continue its uptrend here. But the cause of concern here for me is that the PSEI needs to make a move this week, right? Because if it just continues consolidating here, the breakout may not be as convincing, because what happens here is that price action simply runs out of space, and the resulting price movement may not be as reliable. I mean, for all we know, if this just runs out of space, what can eventually happen here is that the markets may simply be starting a price channel here, as we've seen in a lot of stocks in the PSEI. So we'll see what happens. Hopefully we do get a breakout to the upside, and we'll see if the PSEI could make another run for 6,600, as well as the 6,650 resistance area here. Let's quickly go through the stocks on our watch list. Ayala Corp still continuing its uptrend move towards 609. Again, price channel here. If this breaks out, the next resistance area here could be at 660 or 670. SM also bouncing off the support area here at 830. Let's see if SM can make another move towards the resistance area here at 890. GT cap, we mentioned last week that this pullback here to the support area, so we have consolidation, breakout, retest of support. If this bounces off of here, this is a good buying opportunity. Congratulations if you were able to buy GT cap. Now meanwhile, property stocks, Ayala Land and SMPH finally getting some love last week, especially the REITs. No, a REIT steady here at 39 to 40, but RCR, look at RCR breaking out of this long consolidation here. C REIT also breaking out of this consolidation here. Congratulations. Of course, we have A REIT, RCR, and C REIT, our favorite REITs from the markets. Phil REIT also, if you look at Phil REIT, it is forming the same consolidation here. Phil REIT could be the next to break out, though admittedly Phil REIT not one of my favorite REITs, no, but we'll see. Again, if there are winners, there are losers. The banking sector seems to have hit some headwinds last week. BDO pulling back to 155. BDO looks like it is moving along this price channel here at 154 to 166. Let's see if BDO can bounce back from the 100-day EMA and the support area here. BPI holding steady above the 20-day EMA. Metrobank bouncing back to 75 after this volatile week. But of course, China Bank pushing the financial index down. Let's see what happens there. PNB breaking out of the resistance area here, holding the support for now. So a rotation here from the banking sector to the real estate, the property sector. Is this the start of a trend? So we'll see, right? Now meanwhile, gold consolidated here. So we have a flag formation here, gold breaking out here, retesting the 20-day EMA. Let's see if gold will be able to bounce back this week. Apex, of course, and Felix Mining will simply mirror the movement of gold, as well as OGP. OGP lagging behind. So we'll see what happens there. Bloom has broken through resistances time and again. So it is encountering another resistance here at 530. It failed to break that last week, but still it managed to maintain the support here. There was a resistance here, right? Now it's support. It has managed to maintain itself above that support level. It looks like, of course, if it has done that multiple times before, so we are expecting Bloom to overcome these resistances here in the coming days. The next level, the next critical area for Bloom would be at around 550 or 560. Let's see what happens there, right? Meanwhile, DigiPlus, I remember DigiPlus during these times, we were pointing out that this is starting to look like a head and shoulders formation. If we break this support line here, this would confirm a trend reversal, but that did not happen, and we mentioned that these were good buying opportunities. We haven't been looking at Plus for a long time, and ever since those times, no, Plus has made a parabolic move up to 62 pesos, right? So congratulations if you're able to buy along those lines. I mean, look at the upgrade. CLSA has upgraded the target price to 109, but for now, very overextended from the 20-day EMA. Usually after this parabolic move, Plus needs to consolidate similar to here. That would be another buying opportunity, so watch out for that. Now going to the consumer stocks, Wilcon seems to have flashed a buy signal here. Wilcon looks like it has bottomed out, double bottom here. The breakout of this resistance area here confirms what looks like a trend reversal for Wilcon. This could be a good technical play, right? So the next resistance area is at 812. Let's see what happens to Wilcon. Also CNPF, right? Breaking out of this wedge formation again. The breakout tends to happen in the previous direction, right? So a upward move here, consolidation, we are expecting another upward move. A breakout here confirms that, a good opportunity to enter CNPF. Next resistance area 42.65, then 45.20. Pure Gold also same scenario here, breaking out of this wedge formation here, a good area to buy. With this much momentum, Pure Gold should be able to break out of this resistance area at 33.90. Next areas of interest here, 36.50, 37.80, and 39.95, or even 40 for a good even number, right? So the consumer stocks seems to be the story for this week, so watch out for that. And of course, our utility stocks, Aboitiz Power, again, congratulations here. Manila Water, right? Breakout of this resistance here, a retest of support, 20-day EMA, classic retest of support. This is a buying opportunity for Manila Water. We've also highlighted Globe and PLDT last week. We mentioned that these were great levels to buy Globe and PLDT given the yield at these levels. Slight increase this week. Again, still good levels to enter, but enter cautiously as we are not seeing any catalyst for these stocks as of now. So for this week, let's just wait for things to settle down. Not much economic data happening for this week. We have the GDP numbers for Japan, and look at China. China inflation rate negative, right? So we've been saying that, you know, if your inflation rate is low or even negative, that means your economy is in trouble. So we're seeing these economic numbers from Japan and China on Monday, and the only other significant economic data for this week would be Wednesday's inflation data in the US, again, which could introduce more friction between Trump and Chairman Jerome Powell, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates, and again, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.